here, from the point of the circle with the dot, where the asterisk is, to the next bar, can you see the change of trajectory? Actually, let me do this. I'm going to quickly just get rid of the LinReg 9 for a second. Sure. Here's the change of trajectory. Let me see here. I just want to make the LinReg 4 stand out for you really quickly, so we're not getting confused, especially for those poor traders that are colorblind. We have a few of those. So as you can see here, we've only got the LinReg 4 on the chart. So here we have that sharp trajectory, and you just think of looking for Mount Everest. Whenever you see Mount Everest, that sharp point, as opposed to a curve, something more like this, you know, a curve, you're not really interested in that. You're looking for that very sharp point, and then you're looking to get in and grab your trade. The next thing you're looking for is, now this is where, for those of you in my class where I talked about the 3 different timings, this is an area we're going to get into different debates. The next thing you're looking for is another confirmation, is the HMA color change indicator. So if you follow your whole moving average, which is the green line that hugs the price, that changes from green to red, when that changes color, along with your gap trade criteria, so along with your arrow, your asterisk, your LinReg 4 giving you a sharp V, the long tail or wick, and now you add the color change, now it starts to make these opportunities stand out, as opposed to the brief changes. So now right away we have an indicator, we can say, that separates, makes the right circle with the dot stand out. Because if I was going to go with this circle with the dot, this, and go on this arrow, it wouldn't work. And I would know to stay out of that. Why? Because my HMA color change is still green. So by adding that third confirmation, okay, I have now just added a layer, added a filter that separates something that's brief and that's a fake out and something that's significant. So instead I go, okay, that circle dot's not the right one. I'll wait for the next one. The next circle the dot comes in, I get an arrow, I get my red bar, and I get my HMA. Now I want to play. Now I'm interested, because now I say the HMA is telling me it's good, so this one must be the right one. So having the right set of criteria is really, really good. Now, this is the other thing. There's one more thing we're going to look at. So those are just the basics. Are there any questions about just the basic rules before we get into the extended rules? How do you get? No, the Segreta Quant is not off, guys. My chart is not real time. My chart is historical. That's where we are. So don't worry about the Segreta right now. I just want to go through the rules really quickly. How do you get the EX arrow blue candle on the chart? That is called your EMA gap fill. Remember, there are extra indicators, or bells and whistles I like to call them, that Barbara Cohen designed and created for you, that you can add. That's what we covered last week in class, that you can add to your chart for your favorite strategies. And so if you go up here, you can look for your gap close indicators, and I put them on because we're talking about gap closes today. So over here is your EMA gap fill signal. That is the one that gives you the blue candle with the arrow. And then there's also another great one is the here, it's down here, the STHFT and the STHFT fade. The STHFT fade is the one that gives you the triangle. Okay? So EMA gap fill signal is the one that gives you the blue candle with the EX. All right, so continuing. So now, the real issue I want to address, let's go in here. You can see there's some extra rules in here where it talks about the MACD and pivots and so forth. We'll come to that in just a second. But there's one more rule that I want to talk about that's very, very important. And that is, another great thing that I think Barbara has done is that, I'm going to show you this, is that she says that the best way to distinguish which are the good gap trades to take and which are the ones that are kind of fake outs is to follow the overbought versus oversold principles. So if you want to know when they're really looking to try to start changing direction from the previous trend, you really want to use indicators that are going to demonstrate overbought and oversold information. And those indicators are your MACD and your 3 stows. Now we use 3 of them combined. We use they're the same values as the moving average colors. So you can see here your black one is a 20, same as your moving average 20. Your magenta is a 50, the same as your moving average 50, and the blue is your 100, the same as your moving average 100. So we've got all 3, the 20, 50, and 100 combined together because we're looking for a certain organized pattern within the overbought and oversold information. Because as you can see, sometimes the Stow 20 goes from overbought, the purple line here showing you the 20 line, to oversold, oversold to overbought, the top here, to your 80 line. So the 20 may go by itself and the other 2 may stay behind and lag. And so what we're looking for in terms of the 3 stows working together is we're looking for them moving together. So here you can see, especially in these 2 points, the 3 stows are clustered. So they've kind of reached a point in the algorithm where they're now clustered together and they're moving together in the new direction. That moving togetherness and clustered togetherness formation is showing you that these opportunities are better to take as a counter trend as opposed to something like this, where the Stow 20 is moving by itself. So you want to be looking for that. So if we scratch the chart up, you will see that that pattern will happen certain number of times a day. As you can see here is a very nice one at 12 o'clock. And you can see that your 3 stows are clustered together, changing direction from overbought, heading down towards oversold. And sometimes you just get 2 of them moving together. That's okay too. And sometimes it may not be so picture perfect, but they will still kind of go together. As you can see, these 2 took off, the 50 and the 20, and the 100 kind of followed, and they still, I like it sometimes when the 50 and 20 take off, you can still get in early, and your 100 is now turning around and joining the party. So sometimes it's not so picture perfect, but you are looking for, or they may not be so clustered together, like they might be a little spread out, but they are moving together. How about this one over here? This one's nice. They're kind of really tight and clustered and moving together. So that is an additional confirmation. Now we've added another layer to filtering the noise. Now we're saying we're only going to take the gap trades that the 3 stows are moving together, along with my other confirmations of the spread, the circle with the dot, the HMA color change, and the Limerick 4V, and so on. So everybody understands that point. What was the blue candle? The blue candle is the EMA gap fill signal. Instead of being red, it's blue because it's showing you that at that particular time we are closing the gap. Is the color change, say the candle will break through the 13 EMA and not retrace? The color change, which color change? Are you talking about the candle color change, or you're talking about the HMA color change? I'm not sure of your question. Which color change are you talking about? Just let me know. Let me see a couple of other questions yet. The HMA. No, the HMA color change does not say we're going to break through the 13. No, no, no. Because as you can see here, the HMA color change, the question was, if I get an HMA color change, so we're changing from green to red, does that mean that the price is going to reverse? Is it going to break through the 13 and continue so I can grab more ticks? And the answer to the question is no. The color change just simply means we're changing from long to short or short to long. It doesn't tell you how much or how long you're going to go in that new direction. It just says we're changing direction. That's it. You need other things to gauge how much. Okay? So as you can see here, it changed color, but with a very short direction compared to this one here where we change color is a very long direction. So this would be a retracement and this would be a reversal. But what we want to note for is when you start aligning the correct indicators like the stows in alignment with these things, then you start to see a pattern. So the last thing I want to quickly mention, the way we show overbought and oversold information with your MACD is using the MACD in relation to the zero line. So you can see here you have your histogram, and what this does is, as you can see here, the MACD came through the center line, through this histogram, hit the top, and then turned around going back towards the center line. So wherever the MACD is in relation to that center line, when you have your stows and your counter trend information, so here you can see the MACD is above the zero line. That's what we're looking for. The stows are coming down together. We've got all our EXs, therefore this is a safe counter trend to do. Let's look for a couple more. Let me see here. So there's a few, let's just move into this section here. So as you can see here, your MACD is above the zero line. Your stows are coming down. This is a safe counter trend to do. MACD is above the zero line, reach across. There's your stows, a safe counter trend to do. MACD is above the center line, your three stows. This is a safe counter trend to do, as opposed to something like this. Here's an EX, HMA changes color, okay, there you got your red candle, your HMA changes color, but notice the MACD, it's only just going through the center line. In this case, it was just starting to go through the center line. So you know, by this still continuing through the center line from your oversold direction going to overbought direction, then you know that the trend has still got some teeth to it. It's still going to continue for a little bit. There's still momentum in that direction. But once we clear the zero line, now you can say the trend is played out. It's now starting to peter out. Do you use the arrow near the net number on the bottom right of the chart? No, I don't, but you can use that arrow. It just simply means long or short. But you can. You know, after a while, you start to select what you want to look at, because if you start to try to look at too many things, you will get tired and you can sometimes get distracted. So you can pick and choose what you want to focus on and use. Doesn't mean that it's wrong or right. So we want to compare with the MACD and the stows lined up along with our counter trend. So now let's look at what are the floors. This is an ideal formation. When this lines up, you've got your counter trend, you got your MACD above the zero line, looking to change direction, you got your three stows, you have a very nice alignment, as opposed to here where you can see the stows are not lined up. They're all going spread out, going in the opposite direction, and and your MACD is still got some teeth to it. It's still going through the center line. So now you can see that trying to start a counter trend here against the trend prediction of your lagging trend lines, that would be a big mistake, regardless of the circle with the dot, regardless of the V of the LINREG 4. So you cannot focus on a single indicator by itself to tell you where your good entries are. You have to look for more than one thing, and that is the motto of shadow traders. And what we teach people is what combinations of indicators work well together for your basic trend and counter trend information. So it's the right alignment of the right number of indicators. And remember, in our motto in shadow traders is you have to have 3 or more indicators working well together to give you something that's high probability. Okay, in this case, we've only got 2. It's not enough. So you've got to have 3 or more indicators. What are the best contracts to do gap closes? The best markets are pretty much you can do gap closes in any markets really at the end of the day, but the best contracts are gold, crude oil, and your Russell. You can even do an ES, but I wouldn't trade the ES because there's too many people trading in that market. You'll have filling issues. But Russell, gold, and crude oil are very good. Now, if you want to do the reversal part as well, then you can do that very safely in markets like your currencies and natural gas, your trendy markets. But I wouldn't try to scalp a gap trade like this in the currency markets or natural gas because there's not enough volume and it will whipsaw on you in a heartbeat. So because they're more trendy markets, they have more price action going with the trend, more volume going with the trend than they do with the counter trend. Whereas gold and crude oil, because there's so much volume in there, you can see based on these bars, they have just as much volume going with the counter trend as they do with the trend. Yes, it's okay if you don't trade too many contracts, yes. Okay, so is there anybody who doesn't understand that we're looking for an alignment of things, and we like to use the STOs and the MACD going from overbought to oversold, and it's this alignment that we're looking for to help us distinguish a good gap trade or reversal versus a bad one. Is everybody clear on that before I move on to the next step? Just want to make sure is there any questions about STOs, MACDs, reversals versus retracements? Nope. Do you have to have an ST HFT fade in order to see the ST fade indicator? No. They're 2 separate indicators. The HFT is the box and the HFT fade is the diamond. The diamond, this is the fade indicator. The HFT is the box. The box only works real time. It's like buy-sell volume. They're separate. See, here's the box with the SV. That's the STHFT. That's just telling you there's high frequency sudden volume in this candle. The fade is saying they've been and gone and we're now fading, we're changing in the other direction. They don't always have to be together, or they don't have to be both appear in order to make a trade. One will appear, sometimes they'll both appear. It's, it's a little bit of everything, I should say. Does the STDI still work, and why don't you teach it? The STDI indicator is only for NG, and because I haven't been talking about NG lately, I'll get around to that in the next series classes. I introduce it, and I don't really focus on the STDI because that was kind of like a hot suggestion by a trader. It wasn't really the original criteria for the strategies as they were designed by Barbara Cohen and shadow traders. It was kind of like, oh, this is really cool, we'll add it into the mix. It wasn't the original, let's use this indicator because it's really hot. And it only really works in one market, and there's so many things you can already use. It's not a top of the list indicator. It's just one of those one more things. If you've got STOs and you've got MACDs and you've got moving averages, your Linregs, your HMA, you've got plenty to work with. It's just another addition. So it won't work on crude oil? No. It's strictly a natural gas indicator. So because I haven't talked about natural gas, I don't focus on it. It's not my top of the list, priority indicator. It's just a nice to have if you want to use it. Okay, so let's do one last thing really quickly, and then I'm going to switch to replay, and we're going to do some of these examples real time so that you guys can get some real visual on this. So here's a problem. Should we look at the flaws? Now that we've looked at what we're looking for, let's look at the flaws. Let's look at the fake outs. Where are you going to get faked out? Oh, let me do it this way first. And you're going to get faked out You missed the natural gas indicator? Don't worry about the natural gas. It's called the STDI. It's off the topic, guys. Don't worry about it. STDI. We're not even going to talk about it right now. Okay, so let's look at the flaws. Okay, here's the problem that you're going to have. Okay, let's take it back to here. Let's just click through this and then we're going to do this real time. Here's the problem. Okay, so here you are. You've just learned your rules. You know your circle with a dot. You know your candle, 5 or more tick spread, Linrig 4, HMA color change, Stowe's MACD. You've got it all down and you're all set to go. And you're going along and you're waiting. And you're waiting, you're waiting. You see trend. Okay, here's the long wick. You know, here's the circle with the dot. Okay, here goes my Stowe's. There's my Linrig 4 making a V. My MACD's past the 0 line, heading down. This is a good counter trend, and I'm going to jump in my HMA color change, and it looks like we're going for a reversal, and woo, we made some money. Everybody's very happy. Okay, aren't you happy? You just made some money? Worked. Didn't the strategy work? The rules were all there. Everything was aligned. Did you say the EX indicator is produced by the EMA gap fill? Yes. Gap fill equals the EX symbol. So here we go again, moving along. I'm just going to fast forward this. Okay. And we're looking for another opportunity. Okay, Stowe's are not together yet. MACD's busy going through the center line here. We've got some EXs. So just because you get an EX, an arrow, or a triangle, I should say, does it mean that you trade? No. You're going to get some fake triangles. You're going to get some fake arrows. Okay? Just because you get an arrow doesn't mean you should take the trade, which is why when you come to my beginner classes, I teach you the Mel basic chart where I don't stick arrows on them. Because if I teach you the arrows first, you will become lazy. And you will start to take every arrow and then you get upset when you get faked out. So it has to, arrows are friendly reminders. They're just kind of nudges. You have to have the rest of the rules there to believe an arrow. So in this case, are the rules there? Are the Stowe's together? Is the MACD's only just clearing the center line? Is the HMA change red? Do I have a Linrig 4V? Do I have a long wick with a circle with a dot? The answer is no. Therefore, this arrow is a fake. Okay, so we're moving along. And here we go again. Trend. Okay, now we start to see something more interesting. Stowe's are coming together. MACD's where it should be. We've got the triangle, which is the STHFT fade. Okay, it just says that the HFTs have come and gone, so we're going to fade the HFT, right? We've got the nice candle with a wick there and the circle with the dot, and then we jump in. Okay, now here's the problem. If you are a experienced, confident trader, okay, someone like Barbara Cohen, chances are you will see this, you will jump in just in time to grab your 3 ticks and you will get out. But then I have to talk and help those who are not so experienced and confident. Okay? The ones who are not so experienced, and especially the ones who've lost a lot of money. You're a little bit more hesitant because you saw that this arrow didn't work. Okay, do I believe this arrow now? Is that so? Maybe you think a little bit more. And what happens is by the time you get in, maybe you get in at the low of the bar. How many of you in the room has this happened to? Am I using the Mel Basic? Yes, I'm using the Mel Basic, but I've added the arrows on. Lots of yeses. Okay, how many of this happened to you? Eileen says certainly not. Laura says 1,000 times, many times. You end up at the low of the bar, okay? And then what happens is and here's the real kicker. This is the kicker. What happens is the price, you're going for 3 lousy ticks. You say, well, there's, look at this one. This one went, to the South Pole. My goodness, there's 100 ticks there, and you were only looking for 3, and that one worked perfectly. And here you are over here, and you think this one, the stoves look the same. Don't the stoves look the same? The stoves look exactly the same as that one. And your MACD's the same. Everything's, looking pretty good. And, and in this case, it's even better because this one is giving you an arrow. So you think, heck, we're going to the South Pole, so I'm getting in a little late, but I'm only looking for 3 little ticks. And here's the kicker. The price moves 2 ticks, almost gives you 3. And some of you, it even lands on the 3 target, but it doesn't fill you because there's 1,000 people in front of you in the queue. And what happens is it turns right around. Oh my goodness, what do you do? I'm thinking of going the opposite of where I think it's headed. Spencer. Robert says you scream. You're singing my song, Kelly says. It's when I start praying to the charts, God, to make it go further south, and for some reason they do not listen. I know the gods never listen to me. It's our karma. We have to pay our dues. So it happens to the best of us. Okay, this happens to me, believe it or not. I'm not 100% trade. I can go days of 100%. I can show you 100% trading on certain days, and then certain days I just, I'm tired. Maybe didn't have enough coffee that day, and I hum and haw. I see this one over here, maybe I traded it, maybe I didn't, and then I get in one of these, and boom, it's a kicker. Almost gave me 3 ticks, and all the rules were there. So what can we do to prevent this? You keep moving the mouse up and down, the chart doesn't cooperate. Oh, I'm sorry. Okay. Here, can you see now? Safer to go with the trend. Well, there's money to be made in every direction. You can trend trade successfully, and you can counter trade. And some people can't trend trade. And some people can only trade short. They can't trade long. So with shadow traders, we give you a little bit of everything. But basically, we're looking for this alignment, and the alignment worked over here beautifully. The alignment, if you were spot on and experienced and confident, and you got in here, you would have gotten your 3 ticks. But if you're slightly less confident, slightly less experienced, the nervous hesitant guy, chances are you'll get in somewhere in the middle or the end of the bar. The price will almost fill you and turn around, even though the criteria is there. And you go, what did I do wrong? Am I stupid or something? No, you're not stupid. These are the flaws. And there's flaws with every strategy. So let's look at the next thing. You once said that Barbara would get in on a counter trend trade, the first sign of the red and green depending on the trend. Yeah, we'll get into that in a little bit. There's 2 techniques for scalping, and I covered that in my previous class. There's the immediate quick change based on the Linreg 4, and then there's waiting for the HMA color change. So there's actually 2 timings to starting the counter trend. If you look at here, let me just do this. In the early days, the problem is there's different risk factors. In the early days, Barbara used to wait for the circle with the dot, see momentum divergence, meaning the momentum is there, now the momentum is not there. As soon as this bar comes in, the momentum disappears. She would jump in and steal 3 ticks, and she'd be out. That's a true scalping technique. Same with this one. So what happens is, if you follow this, even on the ones that are not significant, chances are you might be able to steal 3 ticks, especially in markets like gold and crude oil. But what happens is there's times where you will get faked out, like this, where you jump in and there is no 3 ticks, and you will get faked out. So, or if you're slightly late, you will get whipsawed by all this momentum, and it's brutal. So it's a very risky strategy. It's one of the most high-risk strategies to take that timing. So what she did is then she added the HMA color change to help people filter the noise. And so as you can see, this one, which is high risk, the guy who's too slow will get killed on. So now you wouldn't trade that with the HMA color change. So now you only take the one. If you wait for the HMA color change, now you're only trading and stealing your 3 ticks over here. But what I'm trying to say is, if you're the person who's following, you can follow just the HMA plus the Lunrig 4 and the circle of dot and steal your 3 ticks before you hit the 13. But if you're the guy who wants to do the reversal part and follow the stows as well, because you're not only looking for the scalping part, but you're looking for this one too. You're looking for the let's go to the South Pole story. Okay, so you're following your stows. The problem is, if you're doing that, you have to really define your timing, because now if you get in slightly later thinking you're in one of these, with the alignment of your stows, you just got stopped out. And you're wondering what you did wrong. This is the flaw. And it's a flaw with timing, and it's a flaw with the counter trend. And it happens to every strategy. It's not your fault. It's the algorithm of the market. It's the HFT. It's just every strategy has their fake outs. It's never going to work, no matter which indicators you're aligned with. Which you could go find the sexiest indicator you could spend $1 million on, and it's still going to be, there's still going to be flaws. Albert Einstein couldn't even give you a perfect indicator. So it's not Barbara's fault. It's not your fault. It's just how it is. I want everybody to understand it. It's just how it is. Okay? It's the nature of the mathematics. It just comes down to mathematics and averages, the laws of averages. Okay? So how can we fix this problem? And that's what we're going to fix right now. So now the next one, if you got in on the next one, look, here's your 3 stows. Here's your MACD. Here is your one that would have worked. Okay, so this one worked, the other one worked, this one didn't work if you were slightly too late. Now, you can use something like the Segredo. One way we can fix it with the Segredo. So we could say, let's just take this chart back a little bit. So we compare these 2 points. So if we go from this entry here at 1307, okay, 1306 to 1307, and then the price turned. If we go look at 1306 and 1307, right, on this particular point, we're at a number 3 on the Segredo. So is the Segredo going to necessarily help you using a 1-minute chart for this particular entry? Sometimes yes, sometimes no, because right away, just as you see the HMA cross, you got the blue bar, you get in and boom, it turns green on you. Now in this case here, this one worked nicely. Number 1, number 2, it worked very nicely. So sometimes if you just use a 1-minute chart, the Segredo is also going to fake you out, because the Segredo's job is not to tell you this is a perfect market. It's simply to tell you we're going short and we're going long, and this is where the high probabilities are. So the criteria was there. The blue means we're counter trending short. The yellow means we're counter trending long. So we're coming off the green trend and we're counter trending short, and obviously your HMA is just simply telling you we're going short or long. So What else can we do then? And I'm going to give you the answer, but I'm not going to show you I'm not going to give you the answer until we do it in replay. So let's actually, let's do this. I want to see if you guys spot. We're going to do a little exercise. I'm not going to give you the answer. We're going to look for the answer. So let's connect to the replay. Because if I just give you the answer, it's just going to go above your head. Same with the MACD. Let me see. So when would you get in? When the 13 crosses the 20? No, you would get in before you hit the 13 if you're doing a gap trade. If you're doing if you try to get in on the reversal part, you could get in here before you hit the 13. You get in on the spread. You get in on the red part on the spread. If you're doing a reversal, you could get in at the cross. There's two places you could get in. So you have options. You could get in there, or you could get in there and take your 3 ticks, or you could get in there and go all the way through and take 10 ticks. It's up to you. Both timings are good. You say to only do trend trades or only do gap trade closes. Don't do both. If you're inexperienced, especially, and you've lost money, I don't encourage you to do both. Here's the reason why. Your brain, it's like switching from first gear to reverse gear. And the two strategies, it's almost like it requires different parts of your brain to process. And so when you're trading and you're looking for all this alignment, suddenly you switch to all this alignment, your brain doesn't switch fast enough and you get confused and disorientated. So what I tell people is try to mainly do trend trades on one day if you like, and after give your brain a few minutes, and then maybe do a reversal if you like, or just spend one day, just spend a period of time just doing trend trades with the odd reversal, or just doing gap trades with the odd trend. But don't try to do, now I'm going to do a trend trade because the market's going long, and now I'm going to do a gap trade because that's what's coming next. If you trade that way, you'll be hacking and you'll be late to everything because your brain just doesn't work like that. And that's another problem that traders run into. They learn the rules of all the strategies, and then they try to actually trade the market, try to grab everything in every direction, instead of just focusing on a set strategy. It might be good if I use a bigger arrow. Yeah, let me see. Can you guys see my arrow? It's probably because I had my crosshair on. I'm sorry, I had my crosshair on. Anyways, I'm going to connect to the replay. Don't worry. I'm going to do tons of examples for you. So we're going to get this down in just a jiffy. So you say to only do trend trades or only do gap closes. Yes. Yes, especially if you haven't made money yet and you're the inexperienced guy or the guy who keeps making mistakes. Where is, oh, don't tell me I've lost my replay box. Hold on. How did I fix this before? Oh, shoot. Just bear with me 1 second, guys. I lost my little toolbox here. It disappears. 1 second. Just bear with me 1 second. The screen's going to change, but it's just because I'm trying to find something. Oh, this is so annoying. Hold on, bear with me 1 second here. Yeah, that's what I'm doing. I'm trying to check my external monitor by fussing with my screen resolution here, but it's not popping up because without that box I can't start the replay. So just bear with me. There was one thing I was able to do before. It's just this. It only happens once in a while. It disappears, you know. It's hiding somewhere, and I've got to try to find it somewhere off my screen. I'm going to try this one more time. Just bear with me 1 second here. Here, I thought I was all prepared. So, how did I fix this? Let's see if I change the screen resolution. Hmm. Well, that just throws a complete spanner in my works here. Um, I tend to get caught entering too soon. Yeah, that happens, you know, that happens to a lot of people. You're not the only one, you know, and even happens to me because sometimes we've been sitting there for an hour and we see the same pattern over and over and over, and we think, with alignments of additional indicators, you can filter a certain amount of noise. But with that being said, even if you follow all the alignments that you're supposed to work, you can still get faked out. So what do we have to do next to avoid this problem? And that's what we need to look for. So what we're going to do is we're going to do a couple of trades really quickly. We're going to go to 10, 10, 10. Oops. And we're going to look, I want to see if you guys can notice something. In hindsight, the HMA color change with the angle always looks good, like a sure thing in hindsight, but it's, you know, it's the developing trajectory that's not always so clear when you're real time. Not always so clear. Now, why is my charts not loading? There, we already got our asterisks, you know, we've got our HMA changing. However, technically, you know, our stows are not perfect. Our stow 20 is coming down. So let's say we wait for the stow 20 to continue and see if this is going to reverse. Okay, so now it looks like the stows are starting to angle down. You don't see your pointer? Okay, I'll change it in a second. I don't see the same time you're looking at. Okay, just bear with me. It's going to load in just a second. Let me just put my arrow back on. So we're looking at this, we're looking at right here, right time of the real time. Can you guys all see this green candle coming in? It's frozen. Just give it a second. Let me just make sure You guys can see my charts, right? Screen's not working. Let me just check. Okay, just give it a second here. I'm just resetting the screen. Oh, the chart's still showing 12 a.m. 15:16. All right, just give it a second. Time is now 23:50. Okay, geez. Can you see it now? Can you see it now? I tell you, I must have angered the gods tonight. Nobody wants me to get the counter trend across. You're not going to learn it today. I tell you, between the finding the play box and getting the charts to load and now getting the screen to react again. Is it working now? It's evil. Now we see GC start at midnight. My goodness. No? It says I'm on air. Let me do this. Let me try this. Okay, how about now? How about now? Is it good now? Yay! Okay. All right. See? It's called persistence. Persistence always pays off. All right. So continuing, thank you for your patience. Here we are with the two candles. Can you see there's our EX? When you have the triangle and the EX, now we have our HMA. Now technically, yeah, you better listen in tonight. Technically, you can see here that we should have already started a gap trade, but our stows are not quite perfect. Looks like our stows are starting to turn together here. The stow 20 is ticking down. So this is kind of one of those, you know, you can take them if you like them kind of a deal. But watch here, it's going to continue reversing. Here's our replay. So if I decide, oh look, my HMA is red, my stows are starting to, my stow 20 is coming down, right? And I notice that my 3-minute has also got an arrow, a triangle, it's going red. Chances are it's going to go down and close the gap. So even though I missed the 1-minute gap trade, if I glance over at my 3-minute chart, I see that it's going to go down and possibly close the gap. So now I'm waiting to see if the stows are really going to move together, what that MACD is looking like, and I'm watching to see where my reversal entry could be, because I missed the gap trade entry. So the gentleman who asked me the question about where do we enter? Do we enter on the cross or do we enter on the gap? The answer is if you catch the gap part, if you get in before you hit the 13 and you're already in the profit, that's all good. If you miss it, you don't want to enter on the 13, but you want to wait for the closer to the cross, ideally at the cross. And what you're really trading is the completion of the 3-minute gap trade. So because the 3-minute gap trade has started already, it's got its circle with a dot, the same rules that we follow on the 1-minute chart apply also on the 3-minute chart, if you can all see that. So now we're trading the 3-minute chart. So now let's see how much profit we can take. Now I could technically just take 3 ticks. In fact, I'm going to get in on a, I just missed my opportunity. We could technically just take 3 ticks. You can see if I took 3 ticks here to the 13. But let's watch this play out as the reversal. Now you can see as it's developing that the stows are moving nicely together, the MACD is in the right position, and everything's working together in timing. Now, if you notice that the price action is bouncing around a lot, this is gold, because we're sitting on that moving average of the 13. It's got to get through that 13 moving average on the 1-minute chart. And that is essentially on what's causing the price to bounce around back and forth like this. But ultimately, if the direction is set and we truly are reversing, notice that the 13 EMA just changed from light green to dark green, telling you we've changed from support to resistance, which means the price should be continuing short, not long. Okay, so now you can see we clearly got our 3 ticks, and you've noticed that the 3-minute is pretty much closing the gap. Can everybody see that? It's almost Halloween fake out, so scary. The 3-minute chart is not showing a red HMA. It is now. It is now. It is showing it now. So at the you don't always need a 3-minute HMA. Not always. That's just another layer you can add. So technically we would have got our 3 ticks already. And we're basically trading through the cross is what we're trading. We're trading the crossing part of this 13 EMA. But let's see how much further it goes. I'm going to let it play out a little bit. I'm going to speed it up for you because I got a couple more trades to show you. And let's watch how this develops and watch what happens with the price in relation to the 3-minute price action. So for those people who want to get more than 3 ticks on reversals, you have to look for a different set of rules. Now we're into some serious price action here. So it is truly actually reversing. We're now at 150 bucks. And if we look at our Segredo, we'll see that on our Segredo we would clearly be going from the blue to the red. And I'll show you that in just a second. So obviously now this has turned out to be a very good trade. And now we're looking at the 200. Notice we're landing on the 200. So we're landing on some serious support. So maybe that's a time to get out. That would be a very good place to get out because as you can see, now the price action's starting to waver and bounce around here. It could turn around in a heartbeat, could go lower, but there you can see it's starting to change from red to green. And notice that this gap trade on the 3-minute chart squeezed through. Its 13 hasn't crossed yet, but this is a good place to get out. So we just made 180 bucks basically trading the reversal. The 3 stoves moved together, and because they weren't perfectly aligned at the first part of the gap trade, I waited and said, well, I'll trade the reversal part. I'll trade the cross part as opposed to the gap part. And so there's going to be times when you can make a decision like that, and there's going to be times when the gap part is just picture perfect, and you can get in even earlier and get your profit before you hit the 13, or you can trade your profit as you go through the 13. So let's move on to the next one and see how things line up and how things play out. Are there any questions on that particular timing? On the day one can do with 5, 10, even 15 contracts. Is the replay working? Looks frozen on the screen. Can you guys should all see 1025. Can you all see 1025? The 3 yes. Okay, I paused it. That's why I just paused it. Sometimes I pause it when I'm talking. Okay, so let's move on to the next one. I'm going to push play here. Just going to speed it up for you a little bit. Okay, so now we're moving past. There's the HF indicator coming in, giving you sudden volume, but I'm not really interested in this particular trade right now because it's a trend trade. It's going with the moving averages. I only want to talk about the counter trend tonight. That's the trend trade we're going to cover next week. So now my goodness, I have to find where that indicator. So now, okay, here we are again. And notice we have the circle with a dot. So for those people who want to get in now, we have the circle with a dot, we have the V, we have the arrow. We don't have the HMA. Notice I just got in because I'm going to scalp and take my 3 ticks. Notice that my 3-minute is red. So there we go. I just took my 3 ticks. So I'm basically trading from the middle of the bar to the end of the bar, and I've stolen my 3 ticks before we hit the 13. Okay? Notice that I'm not really, notice that the stow 20 ticks down. So let me just pause this. If you notice on that particular move, the stow 20 ticks down. Look at the trajectory of the stow 20. Can everybody see that? You make it look so easy. Can you display your indicators? I want to see the EMA gap fill signal. It's the ST EMA gap fill indicator. No, actually the EMA, sorry. Let me see here. He wants to see my indicators for a second. It's the EMA. There's the ST and then there's the EMA. I'm using the EMA gap fill signal. Okay, that's what gives you the blue bar. Now, notice that I got in based on the basic criteria, guys. The very, very basic criteria, which is the circle with the dot, the candle with the long wick, the Linreg 4 makes the V, and I'm not using the HMA color change. So notice in brackets I say use the HMA color change except for scalping 1-minute timings. If you just see enough divergence and you're going to just steal your 3 ticks before you hit the 13, you're not waiting for other alignments to go for that $180 move that we just did. You can do that without the perfect world. So here the stows have reached the top. The stow 20 is ticking down. The other 2 stows are not going to turn necessarily because they're lagging stows. That's to show you more of the reversal part. Just the stow 20 ticking down is going to show you the gap part. The fact that the MACD's already cleared the center line is good enough. And we have enough divergence. We've got the V. We've got the circle with the dot. That's good enough to steal 3 ticks. You notice I got it in a flash. That is what scalping is. That's essentially what Barbara does, okay? But for those of you who don't always catch that, you can wait for additional confirmation. So let's look at some of these additional confirmations. Is there anybody, before I push play here, didn't understand that? So is that the LR4 and the HMA? Yes. What I'm using right here is the LR4. But notice I didn't trade the fact that the HMA changes to red. I didn't wait for the HMA to change to red here. Because the rule is this. You have 2 timings with the HMA. The first timing is you can wait for the HMA just to catch up to the bar. So we call this the HMA is caught up to the price. So as soon as the HMA actually touches the bar, chances are your gap trade's going to happen. And then there's the second timing where you actually wait for the HMA to change color from green to red. So you don't always have to scalp when the HMA changes to red. You can also scalp when you see the Linreg 4 make a V, the circle with the dot, the long wick, okay, MACD's in the right place, your stow 20's ticking down, everything's there, and the fact that the HMA is just caught up to the price, it's touching the candle. It's like we're now at a certain crossroads is what it's telling you. So that's the first timing of scalping. Then the next timing is waiting for the HMA to change color. So let's see if that happens. What happens with that? Let's see when it changes color. Now again, I want you to pay attention to more than one thing here. So notice also, let me just make this other point. On that particular trade, can you see that, well, I can't really say for sure though, but you can see that the 3-minute HMA is also not red, but it has caught up to the bar. The bar is red, so now we've got a red bar on the 3-minute, we had a red bar on the 1-minute, and both HMAs are touching the bar. So that says We're crossing the intersection, we're going short. Okay? So let's see what happens next and if we can counter trend short. Now notice we've got the arrow on the 3-minute chart, so that's a good sign. We've got another red bar. Those look like, so who wants to go short here? HMA touches the bar. What bar on the 1 minute? Can you see that the HMA touches, it has to touch the red bar that you're getting in on. Or actually the bar before it that you get in. Either the bar before or the bar that you're getting in on. It has to have touched, it has to have made contact. I'll show you that better in just a second. Because when the trend's in motion, the HMA is lagging and it hasn't caught up to the bars yet. You'll see it, I'll show you on the next trend. And you'll notice when the HMA actually touches, makes contact with the bar. It could be the bar before or the bar that you're getting in on. So who wants to go short? Go now. We're going to do the 3-minute gap trade. The HMA's change color. Okay, so everybody's saying go now. So we're going to go short together, and we're going to see if we can get 3 ticks. There's no V on the 3 minutes, so I would hesitate to go in. Well, 3 minutes kind of more of a laggy indicator, so it's kind of curving more. It has changed. We've got a V on the 1 minute chart, but it is a red bar, so let's see if we get 3 ticks. We may be in gold, we may be good enough to get our 3 ticks. Strong possibility we will. Gave us 2 there. Oh, no, now it's not giving it to us. Oh, now it's green. Now it's red again, possibly giving us 1. So in this particular case, what do you think could be the problem here? You don't see my dome? Okay, good. Now you do. Okay. The 1 minute 13. Exactly. So can you see we have a problem here? Even though we have the HMAs turn red, look where we're trading. Look where we entered on. Now look at the risk we're under. Oh my goodness. And look at the 3-minute chart. The 3-minute chart is now changed to green. It was a red candle. We just got faked out. And look at the stows. The stows are moving together. The MACD's in the right place. So what have we learned so far? And it gave us 2 ticks. It didn't give it to us. Okay. Getting in on the 13 EMA is not such a good idea. Now we just got filled, so we got lucky. So you have to work out your timing so that you get, as the price lands on the 13, most of the time it's going to bounce first before it then goes and attempts to do to go short. So you want to be careful. You want to try to, if you're going to go for that extra profit, you want to get in away from the 13. You want to get in earlier and ride it continually to get your profit. Or you want to wait for that bounce and then get in after and ride the reversal through. But watch what happens here. I think we got lucky because I think this one turns around. So we're gonna watch this. Just gonna speed it up a little bit. Oh, the 3-minute does close the gap on this. So either way, we would have made our 3 ticks on this for sure. Okay, because now the 3-minute, notice that the 3-minute HMA is now turning red. Okay, so the 3-minute is closing the gap. Okay, so now who wants to trade the reversal part? You wouldn't want to trade the reversal part. Why? Why would you? To reach to HMA is not reach bounce of the 13. It's not reach but bounce off the 13. Candles below the 13 MJ on 3-minute chart. Yeah, so let's just point out a couple of things here that we can look at. Notice here that where we got filled, finally, the candle is now officially below the 3-minute HMA, and the 3-minute HMA is turned red. So the best part of this price action was really where, with the least amount of risk, was really in these 3 bars here. That's the best part. Notice the HMA on the 1-minute chart is now crossing the 13. Okay, so you want to be very, very careful. This is where most people get into trouble. Is as the price is coming down on the 1-minute chart, coming down, and it, what I call it landing on the moon. It lands for the first time. It makes contact with that 13. When you land on the moon, you never just land. You land and you bounce, then you bounce again, and then you officially settle on the moon. So you want to be careful when it first makes contact, your price, and in markets like gold and crude oil, that bounce could be significant. It could be a stop out. So that timing of entry is very, very dangerous. And people get confused because it's very close to the HMA color change, and they forget the support rule. Remember that 13, when you're on a counter trend, is always support is stronger than anything else. Okay? So the rule of thumb is you either have to get in before, like I did earlier, before you land on the 13, or wait for the landing and then get in when you see the real strength of the gap trade is coming in. And that's really, again, it's the 3-minute gap trade. Now watch what happens next. We're going to continue into the next one because I want you to start noticing some other things. And we're trading in the right directions. Let me just see here. I need to close a couple of charts here. We're trading in the right direction of the stoves and the MACD, so everything is working together. But notice now we're bouncing. So just going to speed it up here. I think it's this one. You can, incidentally, if you want to get rid of the audios, there's always an audio feature within the charts. See where it says audio alert? It either says sounds or audio. If you just change it to false, it will get rid of that annoying sound if you don't like it. I generally turn them off because they interrupt my speaking. So let's move on to the next quick trade here, because this one is going to be another good one. And I want you guys to, we're going to get into the part of, you know, when our perfect alignment is a fake out and what we can recognize to avoid this. We're going to get to that in just a second, and then I'll show you, I'll compare it with the Sagrada as well. So I just want to speed up because here we're moving into a fist, sandwich in a fist. You can see the price action, and notice that the 3-minute is on the 13, so the trend is still developing. And here we are. So now we have our little trend. Now the HMA is now caught up to the price. It's making contact. Can everybody see today's gap day? Yes. Okay. So now you can see, here comes the circle. Is it going to be a circle with a dot? Just take it forward another couple minutes here. Still trending, but the nice, oh, there's the long wick. That's what you want to look for. As soon as you see that long wick, you should start getting excited. Gap is coming. Long wick. And now what happens next? Notice that the HMA is touching the candle. So you don't want to enter on this bar necessarily, but you notice that the HMA on the 3-minute and the 1-minute have caught up to the bar. So that's a good thing. And we've got a long wick. So let's watch here. Are we going to get our arrows, our V, our circle with a dot? We've got some nice spread from the 13. Look at our stows. Our stows are all clustered at the top. Our stow 20 is starting to tick down in trajectory. Our MACD is above the center line, so that looks good. So everything is lined up. We're all there. All we need now is the circle with the dot, the V to come in, and the red candle, obviously. So there's our triangle. There's our ST-HFT fade. There's our circle with the dot. And so I'm going to get in. I'm actually going to get in with 2 contracts. I'm going to put the first one at 3. So let's see if we can get 3 contracts. This is our, look at that nice V. There we just got 3 ticks very quickly. Okay, that's the scalping part. The V, the circle with the dot, the red candle, and here the HMA is caught up to the price. Stows are in the right position. We just scalped 3 ticks. That is true perfect scalping. As soon as the red bar came in, I didn't need to wait for the HMA to change color in this case. I'm just scalping 3 ticks on that quick change. And the first thing I'm looking for is a long wick circle with a dot, V, then my red bar comes in, and I get in and grab my 3 ticks before we land on the moon, before we land on that 13. Is that clear? Where we have the most problem is trying to relate the gap trades on the lower time frames, 1 minute and 3 minute, with the 15-minute chart and higher. That's a good question. Here's the thing, though. You don't need a 15-minute with scalping. The 15-minute is really for trending and for reversals, those developing trend. You don't need the 15-minute for scalping. You only need your 1 minute and a 3 minute, or a 1 and a 5, or a 30-second and a 1, or a tick chart, you know, or your range chart and a 1. You don't need it for scalping, because you're doing what I call sniper trades. Okay, so a 13-minute is gonna it's like waiting for the HMA plus the stows plus it's waiting for too many things to align. The only thing, if you have a 15-minute chart, is maybe you have a red candle. That's all you need. You're trading inside a 15-minute red candle. So if you're scalping 3 ticks like this, true scalping, you don't need a 15-minute chart. That's for a different timing. So next week when we cover trending, we're going to talk about the 15-minute chart. That's when you need the 15-minute chart. Because then you can get out of the whipsaw. So different things for different things. You don't have to align everything to trade. It's all about what you focus on for a specific target. You don't need to align everything. In fact, the more things you align, the more trouble you get into, because the timing's off and there's too many contradictions. So you have to decide what is your target, what is your strategy, and then you figure out the best alignments to give you that timing. Is that clear? How much does legs on a 1 and a 3 come into play? Haven't heard you mention that. How much does legs? What do you mean by legs? Linear regressions? What is legs? Elaborate on that. You're freaking me out. Get out of that trade, he says. No, we're at 120 bucks. Look, I took my 3 ticks and I'm still in the trade. We're at 120 bucks. Look at my stows. My stows are moving nicely. My stow 20 hasn't even changed direction yet. We already did our bounce off landing on the moon. Can you see we made contact? We land on the moon, we bounce, and now we're into the real meat and potatoes. Now what we're trading is the 3-minute is now landing on the moon. So there's still more price to go. I'm trading the completion of my 3-minute gap trade. So now let's watch how this plays out. How much more ticks can I get out of this? Now we're into the reversal part. Now we're trading going through the 13. So let's see how much more I can get out of this. See, and that's the beautiful thing when you're trading gaps into reversals. If you go in with 2 contracts like I did, you can always steal your 3 ticks of the first part, let it go through a little bouncing on the landing on the moon part, and then you can let the second contract ride out while the 3-minute continues the gap. But now this is the part I want you guys to start paying attention, because we're going to watch something in just a minute between this trade and the next two trades. So stay with me. We still got another 15 minutes. These next two trades and this trade should set off a light bulb if you're watching closely here. I haven't made 120 in 2 years. That's because your focus is off. Your focus is off. You're aligning, or you're waiting for the wrong alignment of the wrong things. If you haven't made a successful trade like this, your focus is off. And that's the purpose of, remember, this month it's all about establishing the focus. We've talked about workspace, we've talked about indicators, we've talked about adding the arrows to, so now we're going to be talking about focus in terms of the strategies. So now today we're doing counter trending, next week we're going to be doing trending, but you have to establish what is your alignment. So here we're using the alignment of the stows and the MACD, and you're still going to get faked out for one simple ingredient, and I'm going to show you this in just a second. Oh, you're talking about, well, the one leg, two leg thing, last few beer drinkers guy, Kenneth, is to do with trending. It's got nothing to do with counter trending. What you're talking about is this. The leg thing he's talking about is first wave. It's like the Elliott wave thing. Second wave, last beer drinkers before we go home. That is all to do with the trend. It's got nothing to do with the counter trend. How many legs doesn't have anything to do with the counter trend, unless you want to spot, use them to spot when it's time to counter trend. But you got so many other things to look for, like the circle with the dot, the V, the HMA, the MACDs, the stows, the 3-minute. You don't care about the legs. It's taking you. It's a distraction. Would you try to go to the 50 SMA? Yes. Look, now we're at $160. We can go to the 50 SMA. 50 SMA is a very good end post. It's a very good end goal zone. So if you're looking to trade gap into reversals, which is what we're doing right now, 50 SMA, or if the 200 is there like we did on the last one, it's a very good end place to get out. So you could say, okay, I'm going to get out at 1319.5. Let's put our exit there. It may stop just before, but let's put our exit at 1319.5. Okay, or let's not be greedy and go for the last tick. Let's go for 1319.6. Let's see if it fills us. There we go. Boom. We're out. So we've only done 2 trades, guys. Actually, we did 3 trades, and we're at $490. Okay. So if I scrunch it up, okay, we did this trade, trading the reversal part. We did this trade, and we did this trade. 3 trades, $490. And we're just focusing on a specific thing. The alignment of the stows, the criteria for the gap, and trading a little bit of the reversal based on the stows and MACD. It's very specific. We're trading a specific strategy. We don't care about the rest of the price action or the in-between stuff. I'm not trying to trade the trend. I'm not trying to trade anything else. I'm only looking for something focused and specific. And I'm trying to work with my specific alignments. So now that's all working fine. This is where it works well, because the stows were there, the MACD was there. Now let's talk about when it doesn't work so well, which is the next one. So let's hang in there. Let's move on to the next one. I'm going to fast forward it really quickly. Speed it up here. Let's watch it play out. It actually squeezed right through the 50 and came to the 200, so you could stay longer if you wanted. Oops. Missed it. Shoot. Did I? Yeah. Oh, sorry. Have to take it back now. We're going to lose our profit. Okay, give it a second. Okay, it says, beautiful, I get it. Would you try to go to the, yeah, answer that question. You took at least a 10-tick drawdown. Wouldn't it have been better to do a gap close and then do a long trade into the reversal? You could, you know, there's different ways to do it. Okay, so here we are. Here's our next trade. And here we are again in the same gap scenario. We just had our trend. We got the circle dot. We got our triangle. Excuse me. Oh my goodness, that came on too suddenly. I couldn't pause the microphone. Sorry. We've got our triangle, and we've got our Linreg 4. And here we have the HMAs caught up to the price. Thank you. Our stows are just making it to the top. Our stow 20 hasn't ticked down. Okay. Sorry, I meant a trend trade into the reversal. Yeah, I'll come to that in just a second, Eileen. So let's talk about this for a second. Notice that the 3-minute is red. Got the circle with a dot. HMA is caught up to the price. So this is where it's going to get a little iffy for you guys, because now you're going to say, well, the stow 100 hasn't crossed. It's not really clustered together. The stow 20 is flat. It's not really ticking down. We're clearly in a gap trade. I haven't gotten in yet. Maybe I'll wait for the stow 20 to tick down. This is what you're going to be saying to yourself. There's a lot of divergence. So let's push play here and see if we wait for the stow. Look, it's already bouncing here. We wait for the stow to tick down. There's the stow coming down. So let's watch here to see. There's your stow. See, the blue line has just crossed the overbought line. So we're waiting here. Maybe the next bar will go red. Our 3-minute is still red. It's very important to wait for that stow 20 to really tell you they're going in that direction when the rest of the two are still lagging behind. So now that it's turning down, the MACD's in the right place. Kind of want to wait to see if this HMA is going to change color. Hasn't quite touched the 13 yet. It's only just touched the fractals. Actually, there's the circle dot. Hasn't quite landed on the 13 yet. Still, maybe in the next bar is going to come down to the 13. Be very careful of that, because sometimes it can look like it's landed, but it hasn't actually landed yet. Okay. Okay, so there's my change. So I'm in, right? I'm in, and let's see. I'm going to put 2 contracts on. Let's see if we can do the same thing as we did before. There's my HMA color change. My stow's ticking down. Oops, my 3 minutes turned green. It was red a second. Maybe it'll go back to red. So let's see if we can get 3 ticks out of this, just like we did before. And maybe we can get a little more. Okay, so good. We just made our 3 ticks. So we scalped our 3-tick strategy. Everything was lined up perfectly. Now it's touching the 13. Can you see that? So be careful with that. It hasn't touched there. Now it's touching. 3-minute is red. We're making profit on this. Now, for those people who didn't scalp there, you're probably thinking of doing the trend part, as Eileen said, right? You're probably thinking of doing this part here. So I'm going to get out of this trade and take my profit. So now you're thinking about doing this part here, because the 3-minute is still got to come down and close the gap. The stows are moving nicely. They're all moving together. Your MACD is moving nicely. Because remember, we just did that trade over here. We're thinking we're in one of these. Okay, we just did that trade over here. So maybe we have that trade again. So that's what a lot of you will be hoping for. And you're waiting for more of the crossing part. And being that it's the nice thing about gold and crude oil, what you're going to find is, like I said, the price action on the gap close is the same amount of volume of price action on the trend part for the most part. So chances of you scalping 3 ticks and getting your price is very, very high, provided you get in at the right time. Because there's a lot, those bars are very, very big. But if you get in late, okay, I should have got in a little later to demonstrate this. I got in a little too early because, you know, I'm already in the profit. I wanted to show you, I wanted to try to do a bad example for you. I'm just going to forward it a little bit. If you get in late, would the fractals on the 1 minute or the pivot make you get out? Yes, they could make you get out. Notice that the fractals are support. We're on the pivot, and we're on the intraday pivot, which is the dotted pivot, and we're on the support fractal. Yes, they would make me get out. But I'm also, what I'm looking at is, look at the 3-minute chart. Can you see that even though the 3 minutes coming down for a gap close, it's now changing back to trend, and its HMA hasn't changed red yet. So we've completed our gap. So getting in late on this kind of a trade is not a good idea because it's a retracement. If I traded it as a scalping gap close, not as a reversal, I made my money. So there's going to be some times where everything's going to line up and you're going to scalp and make your money. And there's going to be some times where you can get in later and ride the reversal on the same criteria. So what's going to be the difference? Well, let's look at the next trade. Look at the 3-minute chart. Can you see that the 3 minutes basically come down and it's landing on that pivot? The pivot's stopping it from getting any further. Look at the angle of the 13. 3-minute stows are just coming up to the top. HMA hasn't turned to red yet. So now we're going back to the trend. And now we're in a now we're losing $440. So let's close that trade out. Now we're in the minus. And let's move on to the next one and see. Notice that the stows work nicely. Let's see what happens next. And then I'll give you all the conclusion. Okay, there the trend's continuing. Okay, so everybody needs to notice this. This is very, very important. I'm just going to do this for a second. Can you notice, this is where people don't realize, that can you notice that the HMA is not touching the candle? Can you see that? Can everybody see that the HMA, the green line, the dark green line, not the light green line, the light green line is the 13 EMA. The dark green line is not touching the candle, wick or body. It can be the wick or the body. Can everybody see that? This is very important. If it's not touching the candle, that means the trend is not over yet. Please do it again. Okay. If it's not touching the candle, the trend is not over yet, okay? So we're not ready. We haven't crossed, we're not at the crossroads yet. So watch what happens. Even though you see a red candle with the circle with a dot, it's not ready yet. This is not time to anticipate. Look at your stows. They're still climbing up to the 80 line. Okay, you want to wait because this bar could turn to green. So you want to wait till the HMA catches up to the bar. It's not ready yet. Look, the stow's just crossing. Even though it looks like it's all ready for the gap. It's not ready. All this could change to green in a heartbeat. Okay, the stow still, look at the stow 20. The stow, look, just everything was there for a gap trade, and now it's back to green. Stow 20 is still pointing up. Very important that you wait for that stow 20 to turn down to tell you we're ready. And when you're in high HFT time bars, sometimes this little bar can become a bar like this. It can become a big bar as they suddenly come into the market. So you anticipating, now look, my arrows just disappeared. It says, no, we were kind of going to do a gap, but now we're not going to do it anymore because there's too much momentum to go long at the moment. So now the arrow comes back. Okay, so now look, the HMA is closer to the bar. Now the HMA is catching up to the bar. So it's very important that you don't anticipate, because these last bit of momentum trying to get could be very big bars. It's not always a little bar. Now can you see that the HMA is now touching the bar? Very big difference with the arrow. See, the arrows come and go. The arrow came here, then it disappeared. Now the arrow is back again, but this time the HMA is touching the bar. Very important. And notice that my stows have now crossed the overbought line. So now I'm looking for the real specific timing. I know it's coming. I just have to look for the timing. See how 3 minute is red? Now we're going to push play. We're going to wait for that stow 20 to tick down. The MACD is in the right place. It's above the 0 line. So notice that the 3 minute candle HMA is now touching the 3 minute candle. So we've got two touches. We've got a touch and we touch, but we need a red bar, and we want a nice look at the curve of that Linreg. That's not a good Linreg to go in on. We want a nice V. That's a curve. That's no good to us. Even though the HMA is caught up to the price, we want the rest of the criteria. We want the Linreg 4 giving us a nice Mount Everest, a nice sharp V. We want a red candle with a circle with a dot or an asterisk. And ideally, the 3 minute candle has to be red, showing us it's going to close the gap. So not there yet. And we want that stow 20 at the bottom here to tick down. Oh, some of your comments. See, look at the momentum. Wayne says, great class. I'm going to go slip my wrist because you make it seem so simple. No, it's not simple. Sometimes you're going to get faked out. Like on this one, you're going to get in late and then you're going to take a loss like I just did. It's not always simple. But I'm going to show you what things you're going to look for. And we're going to establish that in just a second. Okay. Now look at, here comes the arrow. Here comes the circle with a dot. Circle with a dot. HMA is caught up to the price. We're looking for that nice V. Here comes the arrow again. There's the V. The V starting to come in. I like that. The V, the stow 20 starting to tick down. That's good. I'd love for the 3 minute to give me a red candle at least. But if I want to get in and start scalping now, I could. I might take a little heat. Oh, I missed my entry. I could though. There's my momentum. There's the 3 minute red candle. So if I wanted 3 ticks, just 3 ticks, and I'm just doing a scalping trade, I could. But if I want to take more, if I want to do the reversal part, let's pretend we're in some more. So we just took 3 ticks on the scalping part. I could trade the rest of the 3 minute gap trade. Okay, we're going to get a little bounce here because we just landed on the moon. We had touchdown. Okay, so we got a little risk here, but I'm going to see that risk through. I've got the HMA color change now. My stows are clearly moving together. My stow 20 is giving me the trajectory I need. My 3 minute has now got an arrow with a circle with a dot. It's heading to close the gap. And let's ride this out and see how much price action. So ideally, I want to trade somewhere down to 1321. 21.7. So that would be really nice if I could trade down there. That's a lot of price, a nice sizable amount of ticks. So let's see if we can get down to 21.7, which puts me above this pivot and above the 50 SMA. That's a good position. It's got to get through the support fractal, through the 13 EMA and the 20 SMA, But so we're going to monitor how strong this gap trade is. Now, what we're going to be looking for, because here we landed on the moon and we got a little bit of a bounce on the 1 minute chart, what we want to look for on the 3 minute chart is it going to stay the course? So we've already taken 3 ticks profit. The things we want to look for are the additional things like the Stowe 20 ticking down, the red HMA. Okay, we've got an arrow, but we want the red HMA to come in. If the red HMA comes in on the 3 minute chart, chances are we're going to stay the course and get through that support fractal and make it to the 13. So we're going to, this is the part where you're going to decide, do I want to take the profit that I already have, or do I want to go for a little more? Look at the momentum, it's coming in, it's plowing through. That's a good sign. When you see the yellow bar like that, the yellow strong momentum, chances are it's going to push through that support. Remember, pushing through a barrier requires momentum. If there's no momentum, chances are it ain't going to get through. So when you see momentum, then you go, ooh, momentum is good. They're going to push through. Chances are they're going to make it down to 21.7. Okay? Let's not get, we don't have to get greedy. We can go 1 tick above 21.7. Let's get out of 21.8. So we're trading the 3 minute gap trade here, because remember the 13 can move as the price moves as well. So we don't always have to go for the last tick. But here we're making another 80 bucks on top of our 3 ticks that we got, our 30 bucks. And staying the course when you're in a profitable trade doesn't mean you always have to get out. So you're looking for additional counter trend information based on your 3 minute chart. Curious, why did you use the color MACD instead? Just because the only reason, there's lots of indicators you can use, as I covered in my last class, and there we just got filled. The only reason I don't have those things because I'm running too much stuff. I'm actually running Segredo, I'm running my Ninja Plus, I'm running GoTo, and if I run too much stuff, it destroys my sound quality of the class. So if I lighten the load, then it doesn't affect the sound. So you can use the color MACD. It's just that because that indicator has to paint, it eats up a lot of resource. Anything that has to paint, like the SMA regions and the color MACD, they eat up a lot of resource. Why does the blue triangle at 1242 and the pink triangle 1304 mean? The blue triangle is, they're 2 different gap trade indicators. They're just telling you that they're closing the gap. This one is the EMA gap fill, and this one is the HFT fade. So they're both gap trade indicators, just one was an old one that was released a long time ago, and the other one is a new one. So if I go to EMA, can you see that the color is blue? Okay, the color is blue, the signal is blue. So they're both telling you the same thing, they're just different indicators. One's an older indicator that still works, and the HFT fade is the fuchsia, or the turquoise for up. Fuchsia for down, turquoise for up. So that's a newer gap close indicator. That's all. Okay, so now let's watch. This is very, very interesting because now we've closed the gap on the 3 minute chart. And notice that we reversed. Okay, notice that our Stows at the top are overbought, and the Stowe 20 is ticking down on the 3 minute chart. So I'm going to speed this up a little bit because we actually could have taken more profit than that because it's going to continue, because the 3 minutes coming down. Now, for those people, as I said earlier, who want to use the Segredo or the 15-minute chart, let's just move this aside for a second. I'm going to pull up the Segredo chart. And then I'll give you the big conclusion. if we look at 1325 on our Segredo chart, okay, notice, where are we here? What time was this? Oh, 1315. Here. Notice we have here our blue bars coming in, okay, going into your number 1, number 2, right? So by the time the blue bar comes in, you can tell more that you're going to have your reversal is going to stay the course on this particular part. So let me do this so you can see it side by side. Here we go. So as you can see here, I put this right side of the edge here. You're coming in to do the gap trade. This candle is on 1306, 1307. Sorry, wrong one. This one. 1318, 1319. So by the time we get to 1319, 1318, the nice thing about the Segredo is when you see it correlates with your HMA going red, and you see your HMA is crossing your gray line along with the blue bar giving you number 1, number 2, chances are it's going to stay the course. Chances are it's going to give you your reversal that you're looking for. And this is the nice thing about the Segredo, is it takes the maybe out. It takes a lot of the maybe out. Now let's take a look at this one here at 1307, the earlier one. So we're comparing, let me just pixel this so you can see nicely. We're comparing this one at 18 and 19 versus this one at 6 and going through 8, right? 8 and 9. We're comparing these two because one goes a little further and the other one changes. They both had the stows and they both had the MACD in the right places. So if we're looking for those alignments, that would be fine, except if we got into this one at 1307 too late, as I demonstrated, you're going to experience a loss. That was only a strictly scalping opportunity, whereas this one, not only did you get your 3 ticks as a scalping opportunity, but you could go a little further and take $100. So how do you distinguish which one's which when you're real-time right side of the edge? Well, there's 2 things you can really use, 2 tools. The first tool I would recommend is the Segredo, because the Segredo is going to come in with your number 1, your number 2, and it's going to give you an HMA crossing that your 13, which is the gray line, and your blue bar confirming to say that we are gap trading. And when you see that cross, you can see now we're going into the red, we're going into reversal. So when we go blue to red, it's showing you we're going into reversals. You can stay the course. You can also stay. What's very nice about the Segredo is you notice that we had to kind of figure out where the price was going to change and exit. Okay, notice that the big spike green candle that came in at the 50 SMA, you can either exit at the 50 SMA. You see, I lost some money there. I could have taken a little bit more money at 1323. The big spike came in. This is how wicked they are. Look, if you stay too long, if you try to get greedy and you stay too long, if I didn't get out where I did, look at where how high this bar came in. I would have lost all my profits. It's basically the same place as my entry. Can you see that? Can everybody see that? It's terrible. They're wicked, these guys. They're absolutely wicked. And look how fast that bar came in. Look, here's my entry in this bar. This is where the price shot up in one HFT bar. This is the power of HFTs. So and they do that. They take out people's stops because they know that the average Joe is trying to grab everything he can get, right? And so you just lost all your profits in one HFT bar. So the answer to the riddle is you either gotta take off for a specific timing, take a set number of targets, or you gotta use the right tools to help you with the HFT problem. And the right tool to help you with the HFT problem is the Segredo, because look what happens. Notice where I exited here. Can everybody see my yellow marker? Notice where it hit support. Some of you may have exited on the 50 and you would have been safe. Some of you might have hemmed and hawed a little too long and got caught on this HFT, lost your profit. And you could have avoided all of that. Look at the Segredo. Can you see the numbering system? Remember, we always say with the Segredo, you want to get in by number 1, number 2, ideally. Sometimes you get in as late as 3. But you want to be out by 6 or 7. By being out with a numbering system, ideally by 7 at the latest, or if you see Christmas, okay, I would have seen this Christmas come in, I would have seen the support, and I would have been out by 7 at the latest. By seeing the number 7, notice that you're out before the HFT bar comes in. You're out. So, and this can help you in many, many places. Here's a number 1, number 2. You're out by 7 before anything could possibly change. That is the reason why we say you've got to be out by 7. The 7 is really, and sometimes even a little earlier. So you don't get greedy trying to go for the last tick and you get caught in the HFTs. Is that clear? So Segredo can really help you with that. That 25 tick up move happened in less than a second. No time to respond. That's an excellent point, Jack. That is very, very true. No time. These guys they have towers inside the Chicago Exchange. They have cleared out the floors and they have these huge computer towers. They have fiber optic cables that are directly connected to the exchange, and they have millisecond auto computer systems that fire their order. You can't compete with that. You're in Australia, in the UK, in Africa, in San Diego. You're in Florida. By the time your little signal gets to Chicago, you can't compete with us. And you wonder why you're in trouble. So the only way around it is you have to establish your focus and you have to use the right tools to define your entry and exit. Okay, so today we're talking about counter trending, and we're going over those details. So we've talked about following the criteria for the gap trade, you going in on the alignment of the stows, the MACD, and if you use the tool of the Segredo, it gives you the blue bar with a red, and you're out before 7 or Christmas, chances are you will avoid an HFT problem. Okay, it starts to make things very clear as opposed to trying to guess it. Now there's one other tool that you can use as well, and that is using a second chart. If you notice that in all these changes that happened, okay, here the price, the stows gave you the correct alignment, okay, but the price moved where it was going to go, and the price here moved where it was going to go. But in both cases, they bounced. In this scenario, the price bounced on the 13, where the circle is, and in this scenario, the price bounced on the 50 SMA. Notice they both bounced. How can you measure those bounces as well, aside from the Segredo? Use a very simple technique if you don't have the Segredo. And I cover this in my support and resistance class. You want to pay attention to the support of another time frame. You want to pay attention to support and resistance information on another time frame. So in other words, we're only trading from point of entry to the next support point. And in this case, it's the pivot and the 13. Notice that the price came down. As soon as it hit the 13, it just barely squeezed through. It came to the maroon fractal, 20 SMA, and then it bounced. So you want to pay attention to the support information. In this case, the fractal and the 13. Here it was the 13 of another time frame. And it usually is a higher time frame, not a lower time frame. So if you're trading on a 1-minute chart, you want to trade the support to the support, or if you're going long, the resistance point of the 3-minute chart. If you're trading a 30-second scalping, you want to trade to the support and resistance of a 1-minute chart. If you're doing a range chart, you want to enter on a 4 range, you want to trade to the support and resistance of a 12 range. So that support and resistance of the higher time frames, fractals, pivots, and moving averages, 13 or 50 or 100, that support and resistance barriers that are plotting on that higher time frame chart is going to tell you how long your counter trending is going to go for. So you have to pay attention to that, and that's what's going to tell you, even though you got your stows, if it's going to be a retracement or if it's going to be a reversal. Been gone for a while. What is Christmas? That's a good question. Christmas is when the colors are out of sync. So if you look on the Segredo, you will see we have a red number with a red bar. We have a green number with a green bar. And the colors of Christmas are red and green. If you see a green bar with a red number, they're out of sync. If you see a red bar with a green number, they're out of sync. And we're not so concerned with the Christmas right at the beginning of the move. We're more concerned with the Christmas towards the end of the move. Notice we got to a 3, and then we changed, the colors went out of sync. That pretty much means the market is flattened out or it's busy changing direction. Notice we got green on green to a number 3, then we had a green 4 with a red bar. That means things have changed. Counter trend started. Notice here we have a green bar with a red number. Okay, so guys, that's all we have time for. We have to go. We're running late here. And so I want you to pay attention to your Segredo. I want you trading between the 1 and the number 7. Mostly, I want you to follow the counter trend rules. I want you to be more focused using the alignment of the stows and MACDs, making sure you're following the rules of trading your 3 ticks before you land on the 13, or if you're going to trade the reversal, pay attention to the 3-minute gap trades. And so when you do reversals, you essentially are trading a gap trade in a higher time frame. You want to only trade the reversal as long as it hasn't landed on a support point of a higher time frame. Because once it lands on that support point of a moving average, a fractal, or a pivot, it's time to bounce. And so you want to look for those things. And remember, pay attention to that stow 20 turning down and the timing of your HMA, your arrows, your circle with a dot. Follow the criteria, go through the program, and learn the rules, and see if you can, real time, align them. And getting on time. Don't anticipate. Don't be late, but getting on time. And that takes a little practice on the replay. Thank you, Melanie. Very clearly explained today. Excellent. I'm glad you enjoyed it. And guys, I wish you a wonderful afternoon. And if you wanted some more of this, come tonight at 7 p.m. We'll be an evening class, and we'll cover more details for you. Thank you, guys. I wish you a fabulous afternoon. Ciao for now.
The organizer has ended the session, and this call will be disconnected. Goodbye.